The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Wednesday, the 24th of February 2021. On the podcast today, John Meyer, mining analyst and partner at SP Angel, talks about IG Index, where they've changed their margin calls and it's caused a bit of a sell-off there. Also copper, and we talk about BlueJay Mining, Empire Metals, Phoenix Copper, Rainbow Rare Earths, Rambler Metals and Mining, and Tirupati Graphite. And at the end of the podcast, as always, I have two lists for you. Top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most read RNSs too. You can check out both these lists at voxmarkets.co.uk, where you'll also see lots of other content. In fact, there's one there, an article there on Zoetic Hale's partnership with one of the largest US-based tobacco-focused chains. There's also practice reports increasing sales traction and growing pipelines. There's a Q&A there, actually, with CEO Tim Sykes of practice with Paul Hill. There's Alba to commence new exploration project at Dalgasly Goldfields. And of course, our COVID-19 index, check it out, front page. Biggest rise of the day, Synergen up 9% to 177. And biggest faller is N4 Pharma down 5.4% to 8.75 pence. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is John Meyer, mining analyst and partner at SP Angel. You all right, John?
Yes, good, thank you.
Now, it's definitely a sort of bull market for resource stocks. They're starting to really move. You know, it seems some multi-baggers having a bit of a breather of late. And I think maybe something to do with it. There's a couple of things maybe, but IG Index, can you explain the margin calls and what's happening there, John? Because I know you've covered it in your morning note.
Yes, IG have written to their clients saying that margin on borrowing for stocks and for Bitcoin and things like that, the margin goes up to 100%. So effectively, you've got to be fully covered on whatever you've bought. Previously, you only had to put up 25% if you were buying stocks or Bitcoin or other things on margin. I must admit that's something I don't do. If I buy a share myself, I put the full amount of money down and pay with the cash. But for those who are braver than I am in the stock market, and
well, there's bravery and stupidity. I mean, if you're going to get margin, it's a very dangerous thing to play with, isn't it? It can skint you. It gets to the stage where you can owe more money than you put down, which is, you know, that's dangerous. Isn't it? Leverage is always dangerous, you know.
Well, look, there are many times when I wish I'd maybe borrowed money to buy things that have gone up, but you know, it's very painful if that goes wrong, and that's not a risk I've ever felt prepared to take myself. But I'm not saying that people are doing the wrong thing by doing it. It's just a question of how much risk can you bear.
Yeah. Well, no, exactly. You have to have a stop loss. One of the biggest lessons I ever learned when I first started was spread betting, and I couldn't believe this. I was sort of long Nasdaq spread bets, and there was a big fat finger moment that happened when there was a big dump in the Nasdaq. This was around 2008, 2009. I lost, you know, compared to what I had back then, was a huge amount. And I started panicking, almost sweating, trying to sell. And that taught me I lost a lot of money in one day. And that taught me, okay, I'm never going to spread bet on leverage like that again. It's too risky, and I'm not comfortable with it, you know. So you've got, do you know, if you go, I just did a video on this actually about one of the first lessons I've learned in the stock market is about risk and exposure, and there's several ways you can manipulate the odds in your favour when it comes to investing, as opposed to gambling, and that's one of them. Don't play with leverage and spread betting. IG Index, biggest platform in there, out there in UK, and they have on the front screen of their page, 75% of retail investors lose when spread betting or CFD trading. That's 3 out of 4 people. So don't even challenge those odds. You know, just become an investor, longer term trends, look for that rather than trying to gamble on short term volatility, because there's very few people who can do it, and you'll probably end up losing, you know, your shirt like I did if you're new to the game, you start that way. It's not easy. Just find a good business with a good trend and invest that way. And only invest with what you can afford to lose rather than leveraging. And that's one thing, I think one lesson I learned and will stay with me,
Yeah, and look, it's important to listen to these things.
Mm-hmm.
The other thing going on in markets today is there's a...
let me say one thing. So the impact of that, of IG saying that you now have to fully cover your spread bets and whatever, I assume because less people have physical money, they'll have cut lots of positions, won't they? And maybe that's part of the sell-off. Is that what's going to happen?
Undoubtedly, I think the market makers have already moved against a few stocks, particularly where they see, shall we say, a greater proportion of leveraged investment. It's natural for a few guys to say, oh, well, I'm out and I'll buy back in again, particularly on the day trading side. And I think a lot of this does relate more to day trading than anything else, frankly, to people who are sitting at home and probably trading a bit more than they should do. But I'm not going to say if that's right or wrong. I just think the markets various authorities in the markets are concerned. There's a bit of unwinding of tech valuations in the US, with Tesla at such high levels and still at very high levels, despite coming back about 25%. It does create some concern. So this is why brokers like IG move to try and limit the losses. I mean, at the end of the day, they don't want their clients losing money either.
Yeah. And also the sell-off. I think this bonds have gone up a bit in their price, and there's a worry about inflation happening. And if that happens, and if interest rates go up as a result of that, that's not good for sort of tech companies who are not generating profits and got some debt and all that stuff. So it's a bit of a sell-off all around. But it's due, like you said, you've had people approaching you haven't talked to in years, asking you what they should be buying. To me, that's a sign we're very close, if not at the top of the market for this cycle. And when I say cycles, I don't think we're going back into a bear market, but I think a healthy sort of sell-off that the steam come off is probably, is good for the market, Well,
I still think we're very much in an uptrend.
Yeah, absolutely.
This new super cycle that I feel that we're coming into now is has support and it has legs. So I'm 99.9% invested in the market right now, and I'm not worried about market makers ticking a stock back here or there. I see that as an opportunity for more people to come in. And I do see any bull market is going to see a few ups and downs along the way. That's just by the nature of markets. A bull market climbs a wall of worry, as they say.
Yeah.
So the important thing is to look to see, are there any seismic shifts in the economic environment? Has the world changed on any particular day? And yeah, there are small things that are changing, but the big shifts are still very positive. The statement coming out of the Chinese Central Committee on Friday night and reported by South China Morning Post and a few others is extremely bullish. So President Xi's move to effectively build more infrastructure in the rural community, to bring everybody in China out of poverty. I mean, these are grandiose statements, but fantastic ambitions. And the great thing about China is they all get behind it, or almost all of them, unless of course we're jailed in a certain part of China. It's really rather difficult, isn't it? And no laughing matter. But what else is going on in China is the Chinese they've got very excited about this statement from President Xi, and there's going to be more statements coming out of the Chinese Communist Party in 2 weeks' time, when they have yet another big meeting. I forget what it's called. But I think as a result of that, we've seen a previously sort of unknown futures brokerage in China called Shanghai Dalu raise its copper futures holdings to over $1 billion. I believe it raised its positions by 800%, and now it is the top position holder in April to July contracts. That's May, June, and July copper contracts. So it's very long. And when you see a group like this, which I believe is relying on funding from small investors, putting large amounts of money into the market, everybody starts to get concerned. Is this the sort of is this the peak of the market in China? I think they're all piling into the market because they can actually see lots of copper demand coming through, and I think it's fairly obvious to see that demand is going to come through. It's worrying the manufacturers who are buying physical copper because it's driving the price up, and that in itself will have a small impact on inflation. The bigger impact on inflation will be rising oil prices, as it almost always is. But at the same time, all the other metals prices seem to be rising, particularly anything related to electric vehicles and renewable energy.
Do you know what? I haven't looked at the chart of the copper price for a while. And literally, I had to scroll back to see where it was last at this price, but it's gone stratospheric of late, isn't it? I mean, the RSI, which is called a relative strength index, and that's about momentum. Generally, it goes from 0 to 100. 70 is called overbought. It's now at 80, 83, 84. So generally, when it gets up there, it's a cool-off, but it's gone a bit bananas of late, isn't it? So on my chart, 4.1, what's that per copper per watt? What's that? What unit is that?
That'll be cents per pound.
Okay, so it's last time it was this high. It was back in 2012, wasn't it?
Dollars per pound, in fact.
Yeah, dollars. It was dollars per.
Yeah.
So that's 2012. We're going back to 2012 peaks, aren't we? Wow.
So I mean that's over $9,000 a ton, and that's so just about everybody in the world producing copper is making very, very good money out of this, which is great from a mining perspective. Of course, the car companies and the people who have to buy that copper will be less happy about it. And the market tends to want to move back into equilibrium, but to be honest, at the moment, demand is outstripping supply, and that means prices are just going to go up.
4.5. I thought it was the last time it was in 2012. Peaked out there 2011 actually. 4.5. That's the peak there. We're not far from there. 4.1 at the moment, but it's risen very strongly of late. Wow. I didn't note that. That's amazing. Okay, well,
the market is quite likely to pull the copper price back down again.
Yeah,
but I still think that we're going to go over $10,000 a ton in the next couple of years. It's just sometimes these things happen sooner rather than later.
Yeah. Okay, all right. Well, let's look at some individual stocks. Let's go in. In fact, let's talk about copper stocks. So you mentioned there, Phoenix, I think Empire, Rambler. So go through what's happened with Empire.
Empire. The Empire is a gold stock.
Gold stock, yeah. I'm thinking about their previous thing.
They published some very good grades in the week on Monday at their Eclipse Gold project in Kalgoorlie in Australia. This is shaping up to be a very nice project, and what was important was they announced parallel veins and stockwork style mineralization, which suggests to us that there's more mineralization than we're just seeing in the drilling results. And management are really quite excited about this. In fact, they were a bit puzzled as to why the stock hadn't really moved on the results. And I think the market's been focused more on copper and other metals, and gold is taking a bit of a breather. But these are nice results from the Empire project, and I think there'll be some more nice results to come. So. Well done them. Okay,
still sort of next in order then. So Phoenix, and then we're going to Rambler. What's happening with Phoenix?
Look, they've taken out a debt facility. I must admit, it's not a bad time to use money from one of those sorts of facilities when there's so much demand around. So they're getting on with things. They've got a project to produce 8,500 tons a year of copper. That's about $79 million worth a year, at relatively low cost. So they show an IRR of 57% on that. So it's only a small plan for now, but it's a much bigger project behind it. So I do think there's more value that can come out of this. Mm-hmm. And so yes, I'm quite, I'm looking for better things to come out of Phoenix going forwards.
Okay. Rambler, Metals and Mining, where are they based? Just for people not aware, just take us through that, John, if you know what's happening there.
Oh, Rambler in Canada. And they have the Ming mine. That mine's been around for a while. had a bit of a tough time in the last couple of years. Just it wasn't managed well enough, and the copper price was very low. And I think that everybody working on the mine was really quite despondent. That's all turned around. It's been completely restructured, financially restructured, so it's not carrying the debt burden that it had. And pretty much all of that is gone now. So I think the stock's in a much, much better place to move ahead. The news this week on Monday was they just put in a new non-executive, Ms. Priya Patli, not Priti Patel, but Priya Patli. Look, I think it's just in a good place.
Be surprised if it's Priti Patel. That'd be very surprising. I mean, I assume she's quite busy as it is, taking on a small resource stock. Yeah, go on. NED. Go on then. And what's next there? What's happening there? What's next? What's likely to sort of move this price apart from the copper itself? Going to move it, I suppose. But anything happening there? What's the next bit of news?
For Rambler, they're ramping up their production again now that they've got a better mine plan. They've got a good new man in there running the business. He was the guy that turned around Shanta Gold. So. No, we're looking for good things from Rambler. I think that's going to go better.
Yeah. Okay, cool. And so you got copper, gold, and what's their market cap there? Because I've just updated their
Rambler
shares.
at about £40 million.
Are they? Wow. Oh, okay. I thought they were cheaper than that. 347. Wow. Yeah. Do you know what? They've all risen, haven't they? Stocks. Wow. In fact, Rambler's chart. Am I looking at that? It's not really risen, is it? Well,
we expect Rambler to produce around 10,000 tons of copper a year, and that's worth $90 million, and that's more than double the market cap. Almost double the market cap when we convert that back into pound sterling. So,
what's the timeline for that? Do you think? How far off is that? When you start?
Well, they're producing now, so we're talking that run rate will be up later this year. So we're in it. We don't have to wait for somebody to build and finance the mine. It's all the money's there, all the expertise is there.
Why is the share price not reacting to that? There's been a bit of volume there, big bit of volume there. I mean, do they need to? What? Cause it's literally flat as a pancake. I mean, hang on. Sorry. Do you know what? I'm looking on a weekly chart there. I was looking at the copper price on a weekly chart. That's why. Hang on, let's go back to daily. Any change there? Oh, it's still a bit flat, isn't it? That's not a bad thing. That's a good thing. If it's daily, it's not going up. So there's potential there, isn't there? Wow.
Look, sometimes these stocks get left behind.
Yeah. Okay. So, but you've got to look at the chart, you see, because some of these stocks have rallied really hot of late, and they've reacted. So Rambler, decent jurisdiction, Canada, decent resource here, and they're producing. They're in the right metals at the moment, so it seems like there could be potential there.
Yes, a lot of the risk that you normally get associated with a development style company isn't there because it's already up and running. It's all the permits are in place. Everything works.
Mm-hmm. Okay, next one then. Rainbow Rare Earth. What's happening there?
Yeah, Rainbow's had a bit of a run recently. It's a rare earth stock, and we know that the Chinese have threatened to withhold rare earth supply from US defense companies. And we know that the US is very keen to encourage non-Chinese rare earth producers to get into production, and not just to get into production, but to encourage them into producing better quality, higher spec product. So Rainbow have announced feasibility for a 10,000 ton a year downstream process plant. They'll site that in South Africa. And the reason for that is all the skills and the engineering services are in South Africa, so it makes a lot of sense to put it there. They've got the Kakara mine in Burundi, but they also have this new Palabora tailings project in South Africa. So actually siting the downstream process plant somewhere near that Palabora project, it strikes me as a very good idea. It doesn't need to be right at that site, but it possibly will be, because again, that's got all the services, power, rail, roads, everything that you really need for this sort of thing. And it will be a permitted site because it was operated by Sasol many years ago. And Sasol built the first, the pilot plant for rare earth processing on the next to the tailings dump there, and the rare earth elements within that tailings dump are already in chemical form, which is really important. So there's a great deal of value to be had out of that project, and the first step is to complete the feasibility work and get and put the finance together to build this project. And the great thing is that will add huge value to not just the Palabora project, but to the Gakara project in Burundi as well. So at the moment, they don't get particularly well paid by the traders for the high grade ore that comes out of Burundi. But if they turn this material into the higher grade product, they'll get so much more of the price. I mean, I'm sure they'll more than double their revenue from that.
Mm-hmm. Yeah. Cool. RBW there. Tirupati. It's Graphite. I've seen it mentioned a couple of times on social media. I interviewed them a while back, and they IPO'd not long back. So what's happening there, and what's the deal, John?
Yes, they're working on high-grade spherical graphite for commercial production from their project in Madagascar. So the work has demonstrated a high yield of 45.8%. And in fact, rising up to 68.4% of spherical graphite. And this is what the battery manufacturers need. So you have to go through a process of accreditation, but the important thing is producing the stuff in the first place. And then you have to show that you can produce it consistently. But I really like the management of Tirupati. It's run by Sishir Podar. I think he's a good man. Not every Indian company is as welcome as this one on the London Stock Exchange, but I think this has a good future.
Yeah. So why is that then? Why do Indian companies not have a good track record? What's the deal there? Just different sort of regulation and culture? What is it? What's the problem?
I've never fully understood this, but I think there's been some big scams over the years. Yeah. In relation to Indian companies in the UK, and I've not been able to pinpoint it. I've seen some Indian companies not behave so well, like Vedanta with its situation in Zambia, where it wasn't paying the taxes that it was supposed to pay. But having met Sishir Podar from Tirupati on many occasions, I think he runs a very straight ship.
Yeah. Cool. Excellent stuff. Okay. What's the ticker there? TGR, isn't it, I think?
TGR, yes. And it's a £68 million market cap. Okay. 91p, I think, on the share price. So, I think as a new graphite producer, it's in a good place. These guys have a business in India which works well. They know what they're doing. They now have this Madagascar project. I think that will work. That has a place within the battery supply chain.
Yeah, cool. All right, marvellous. And one more, you're going to mention BlueJay?
Yes, BlueJay are already training people in Greenland. The fantastic news was that the US Exim Bank, this is the import-export bank of the United States government, has offered them $208 million by way of a letter of, or have a letter of interest in offering them that finance. The last time Exim Bank offered some money for Greenland, it was at an interest rate of 1.46% to Ironbark for their zinc project, which is even further north in Greenland than the BlueJay project. So this is fantastic news. I mean, I really think this means they are within a stone's throw of the complete financing of the Dundas project. I don't think they'll need to come to shareholders for the money. I think that will be funded entirely out of Exim, the EU, probably some Denmark state financing because they want to be involved, and some offtake financing as well. But with $208 million potentially coming from Exim Bank, that feels like job done to me.
Marvellous stuff. And by the way, if you are listening and you've got this far, we haven't bored you to death, and you want to hear John's opinion on some small cap resource stocks, then let me know on Twitter, actually, at Vox Podcast, probably the best. So email me, I suppose, to Justin at voxmarkets.co.uk and ask John to have a chat. We'll send a list if you want, or one or two, and I'll send them on to John. If he knows about them, we'll chat about them. Is that all right, John?
Sure, that's fine.
Marvellous stuff. Cheers, fat fella, and we'll speak next week.
Thank you, Justin.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. Argo Blockchain, up 15%. What's the bounce? Is Bitcoin bouncing here today? A bit of a sell-off, isn't it? So, it's having a bounce. So, Argo's following that, of course. At 4, Lloyd's Banking Group, really, down 1% to 38.84. At 3, Omega Diagnostics, non-mover, 86 pence. At 2, Fragrant Prosperity Holdings. What the heck is that? FPP, up 41%. Someone's ramping that at 6.375. And at 1, Ridgecrest, non-mover, at 2.05. Let me check out Fragrant. What's that about? It's got to be a tiny market cap. Yes, it is. 2.75 million. Of course, I'm not sure the share is an issue. Correct. But it's quite a target company, business focused on the financial services sector. And, CBD. Wow, that's the new hot stock, isn't it? CBD. Everyone's going to CBD and cannabis and cannabinoid. Okay, time for the top 5 most read RNSs. They're as follows. At 5, Zoetic International, US distribution update. At 4, Argo Blockchain. Argo commences trading on OTCQX market. At 3, Avacta Group, business update. At 2, Novocyte, research and development update. And at 1, Omega Diagnostics statement on ABC 19TM rapid antibody tests. That's it for the podcast. Thanks for listening. Muchos appreciados.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.